The van wasn't speeding. There were no sirens, no chase, no reason to remember it at all. On a cold Scottish motorway, it looked like just another delivery vehicle, doing an ordinary job. But when officers opened the back doors, they didn't find socks or sportswear. They found neatly packed boxes of designer clothing, Calvin Klein labels, flawless stitching, convincing branding, almost perfect. Almost. That quiet roadside moment would unravel a $150 million fraud and expose a man who spent years hiding one of Britain's largest criminal enterprises behind the image of a respectable businessman. Arif Patel had built his life around looking legitimate. Based in Preston, he ran what appeared to be a normal textile operation, supplying everyday clothing across the UK. Socks, sportswear, fashion basics, nothing flashy, nothing that raised suspicion. His business dealings looked clean. His offices were functional. His deliveries were constant. To banks, suppliers, and even regulators, Patel was simply another wholesaler navigating a competitive industry. And that was exactly how he wanted it. In a country full of small manufacturing firms, anonymity wasn't a flaw. It was protection. But beneath that polished surface, Patel was constructing something far bigger than a clothing business. Using Physotex Ltd as the core, he created a network designed not just to sell goods, but to move money, vast amounts of it, through systems meant to reward honesty. Counterfeit designer clothing flowed into the UK in commercial quantities, carefully mixed into legitimate supply chains. At the same time, fake companies, fabricated invoices, and paper-only exports powered a VAT carousel fraud that quietly drained public funds on an industrial scale. What made Patel dangerous wasn't loud behavior or reckless decisions. It was patience. Every element of his operation mimicked legality. VAT returns were filed. Exports were declared. Transactions were documented. On their own, each step looked routine. But when investigators eventually stepped back and examined the full picture, the pattern became unmistakable. The same goods appeared to travel in circles. Companies vanished just as questions arose. Refunds grew faster than any real business could justify. The Scottish motorway stop was the spark, not because it revealed everything, but because it forced authorities to look closer. Trading standards officers quickly confirmed the clothing was counterfeit. That alone could have ended as a limited case. But when shipment values were assessed, the scale didn't align with a one-off mistake. These weren't small batches meant for backstreet sales. Each load was worth over £1 million. And this was just one van. As attention turned toward Preston, investigators encountered a company that looked almost too well prepared. Records were orderly. Accounts were maintained by professionals. Explanations were calm and technical. Patel presented himself as cooperative, suggesting supplier errors and logistical misunderstandings. And for a time, those explanations slowed momentum. The system assumes good faith, and Patel relied heavily on that assumption. But experience teaches investigators that real businesses leave messy trails, disputes, delays, inefficiencies. Patel's operation was too smooth. Profits rose without corresponding growth in infrastructure. Export destinations didn't match consumption patterns. Associated companies shared subtle similarities in structure and timing. Slowly, HMRC and regional police began connecting those dots. What emerged was not chaos, but choreography. Companies were created to buy goods, then export them on paper before dissolving. VAT was reclaimed repeatedly as those same goods moved through a loop of transactions. Offshore accounts, particularly in Dubai, acted as buffers, places where funds could rest beyond immediate UK reach. Accountants and consultants helped maintain the appearance of compliance, often relying on information provided to them without seeing the whole. Through it all, Patel stayed distant from hands-on movement of goods. He didn't drive vans, he didn't manage warehouses. His role was control. Decisions flowed downward, insulated by layers of administration. It was a structure designed to make responsibility hard to pin and even harder to prove. But complexity can only delay scrutiny, not defeat it. As data accumulated, investigators stopped looking at individual claims and started analyzing connections, shared addresses, repeated invoice language, overlapping phone records. That's when the mask truly slipped. Businesses once treated as independent were clearly interdependent. Patterns repeated with mathematical precision. The counterfeit clothing, once thought of as the main crime, became just one component. The real story was the money. Tens of millions reclaimed, then tens of millions more. Eventually, estimates reached £150 million, an amount impossible to explain as coincidence or error. Public funds meant for services and infrastructure had been redirected through spreadsheets and shell companies into private gain. Still, to anyone passing Patel in the street, none of this would have been visible. He didn't look like a criminal mastermind. He looked like a man who understood paperwork, logistics, and how to stay unnoticed. That was his greatest advantage and his greatest miscalculation. Because once that illusion cracked, it shattered completely. Authorities no longer saw a businessman defending his company. They saw a system built to deceive, sustained over years, and protected by distance and documentation. The van on the motorway had done more than reveal fake clothes. It had exposed the first weak seam in an empire stitched together by patience, planning, and silence. And from that moment on, even if Patel didn't realize it yet, the story was no longer about whether the truth would surface, but how long it would take and what would remain when it finally did. And as investigators dug deeper, it became clear that what they were dealing with was not a single illegal activity, but a carefully balanced system where every part supported the other. Faisaltex Ltd. was only the public face. Behind it sat a rotating cast of companies, many registered at different times, often sharing directors, addresses, or accountants. On paper, these businesses traded with each other constantly, buying and selling clothing in ways that looked routine to anyone scanning individual transactions. But when viewed together, the movement made very little commercial sense. The same products appeared to travel repeatedly without ever reaching a genuine end customer. Exports were logged, VAT was reclaimed, and then the trail simply restarted under a new company name. This was VAT carousel fraud in its most refined form. Instead of one company disappearing with the tax money, Patel's structure allowed the fraud to cycle again and again, quietly pulling millions from the system while leaving behind a trail of paperwork that looked legitimate unless you knew exactly what to look for. What made this operation so difficult to detect was how closely it mirrored real international trade. The volumes didn't spike suddenly, they grew steadily. The invoices weren't sloppy, they were professionally formatted, using correct language and consistent pricing. Customs declarations were filed. Accountants signed off on returns. At every checkpoint, there was just enough legitimacy to prevent immediate alarm. The fraud wasn't hidden in darkness, it was hidden in plain sight. Counterfeit goods played a crucial role in keeping the machine running. Fake designer clothing provided physical justification for the paperwork. Shipments entering the UK were real, warehouses held stock, delivery vans moved constantly. This physical activity gave credibility to the financial claims. Investigators later noted that the presence of actual goods, even fake ones, helped mask the scale of the VAT fraud happening alongside them. Patel's choice of brands was deliberate. High-demand labels meant that counterfeit items could be sold quickly and quietly, often mixed in with genuine stock. Retail complaints, when they occurred, were fragmented and difficult to trace back through wholesalers. By the time a brand owner noticed a pattern, the goods were already sold and the supplying company might no longer exist. Money movement was just as carefully planned. While operating funds stayed within the UK long enough to maintain appearances, significant sums were transferred abroad. Dubai emerged as a central hub, not for its glamour but for its practicality. Accounts there allowed Patel to separate profits from risk. Even if UK companies collapsed under investigation, funds sitting offshore remained temporarily out of reach, buying time and leverage. Investigators began to understand that speed was essential to the operation's survival. Claims were submitted quickly, companies were dissolved before questions matured into audits. New entities appeared almost immediately, often trading with the same partners under slightly altered names. To the untrained eye, these looked like ordinary market shifts. To forensic analysts, they looked like cloning. As scrutiny increased, the pressure rippled outward. Freight handlers were questioned about routes and volumes. Warehouse records were compared against declared exports. Accountants were asked to explain how identical goods could legally qualify for repeated VAT refunds. At every checkpoint, there was just enough legitimacy to prevent immediate alarm. The fraud wasn't hidden in darkness, it was hidden in plain sight. For those involved on the edges of the operation, the mood shifted. Routine questions turned into formal interviews. Confidence turned into caution. Some associates distanced themselves. Others assumed silence would protect them. But documents are impartial witnesses. They don't forget, and they don't contradict themselves. As records were reconstructed year by year, Patel's role moved from implied to unavoidable. And still, from the outside, Faisaltex looked operational. Deliveries continued, offices stayed open. The gap between appearance and reality widened with every passing week. Investigators later described this phase as the most dangerous, when a criminal operation continues running smoothly even after being exposed internally, because no one outside realizes what's already known. Authorities also faced a broader realization. This wasn't just about one businessman exploiting loopholes. It was about how easily complex fraud could blend into normal trade. Patel had not invented VAT carousel fraud or counterfeiting. He had refined them, scaled them, and combined them into a system that fed itself while leaving behind a trail of paperwork that looked legitimate unless you knew exactly what to look for. By the time Operation Mimosa formally intensified, the investigation had moved beyond suspicion. It was now about containment and reconstruction, preventing further losses, preserving evidence, preparing a case strong enough to survive without dramatic moments or confessions. This would be a document-driven prosecution, and the documents were finally telling one consistent story. As the walls began closing in, Patel himself became harder to reach. Communication slowed. Decisions were increasingly relayed through intermediaries. It was subtle, but deliberate. The same caution that he had used to build the system was now shaping his exit strategy. Because beneath the layers of companies, accounts, and shipments, Patel understood one thing very clearly. Once authorities see the full picture, complexity no longer protects you. It incriminates you. And as investigators continued assembling that picture, the empire that once looked invisible was becoming impossible to deny, even from thousands of miles away. The unraveling of Arif Patel's empire took on a more complex dimension once investigators began tracing the intricate financial networks that had sustained his operations for years. Offshore accounts in Dubai, previously thought to be standard international business arrangements, revealed layers of shell companies, intermediaries, and opaque transactions designed to obscure the flow of money. These accounts were not haphazardly created. They were meticulously structured to give the appearance of legitimacy while facilitating large-scale VAT carousel fraud, allowing Patel to reclaim taxes on transactions that never actually occurred. Every transfer was timed and calculated, often routed through multiple jurisdictions to make tracing the origin of funds difficult. Forensic accountants meticulously followed the money, piecing together a narrative of deception that spanned years and millions of pounds. The complexity of this financial web was both impressive in its sophistication and damning in its intent. Investigators discovered that Patel had cultivated relationships with professional accountants who, knowingly or unknowingly, helped give a veneer of legality to fraudulent activities. These professionals assisted in preparing financial statements, tax returns, and export documentation that appeared compliant with HMRC regulations, but were in reality designed to conceal the scale of Patel's criminal activity. Fake invoices, duplicate paperwork, and falsified export records became tools in a carefully choreographed operation. These documents allowed goods to move in and out of the UK while appearing fully legitimate, creating a system in which millions of pounds could be moved and laundered without immediate detection. The coordination between his accountants, shipping agents, and offshore entities demonstrated the high level of organization and planning required to sustain such an extensive scheme. At the operational level, the logistics of moving counterfeit goods were no less sophisticated. Patel's shipments often involved millions in counterfeit products from major brands like Nike, Disney, Prada, and Calvin Klein. Containers were carefully prepared, labeled, and scheduled to pass through customs with minimal scrutiny. The use of multiple ports, coupled with legitimate export documentation, created a seamless illusion of legality. Patel's knowledge of international shipping and customs regulations allowed him to exploit gaps in the system, ensuring that large-scale shipments moved with minimal risk of interception. Investigators noted that the sheer volume and frequency of these shipments suggested a level of expertise comparable to legitimate multinational trading companies, demonstrating the convergence of criminality and professional business practices. VAT carousel fraud formed a critical component of Patel's scheme, and understanding its mechanics was key to the investigation. Essentially, Patel created a series of transactions between fake or transient companies, claiming VAT refunds on goods that never physically moved or were already paid for. By cycling the same goods or their financial equivalents through multiple entities, he was able to generate large tax refunds, creating a cash flow that further fueled his operations. Each fraudulent transaction required precise timing, accurate documentation, and coordination across multiple parties. It was not a matter of chance or opportunism. It was a deliberate and ongoing effort to manipulate the tax system for personal gain, demonstrating both a deep understanding of regulatory frameworks and a willingness to exploit them to the fullest extent. Operation Mimosa, the nationwide investigation launched in response to the initial seizures, highlighted the complexity of dismantling such a network. Coordinating multiple agencies, investigators had to track shipping containers, review financial records, and trace the intricate relationships between shell companies and offshore accounts. Seizures of 39 shipping containers filled with counterfeit goods provided tangible evidence of the scale of Patel's operations, while digital and financial records offered insight into how the empire had been maintained and grown over time. Each container, each document, and each transaction was a piece of the puzzle, gradually revealing the extent to which Patel had embedded criminality into the framework of his business. The investigation also illuminated the human dimension of Patel's operation. Employees, suppliers, and middlemen were carefully managed to ensure loyalty and discretion. Some were unaware of the full scope of the fraud, believing they were working for a legitimate company. Others, who were complicit or motivated by profit, played specific roles in executing the scheme. Patel's ability to maintain control over such a network, spanning multiple jurisdictions and levels of operation, spoke to his strategic thinking and managerial skill. He had created a system in which each participant's actions were guided, monitored, and integrated into the larger plan, demonstrating a level of organization that mirrored large-scale corporate operations rather than typical criminal enterprises. The eventual flight of Patel to Dubai marked a critical turning point. While he evaded immediate arrest, investigators continued to pursue evidence and collaborate with international authorities to freeze assets and build a case for trial in absence. His stay in Dubai, a jurisdiction often perceived as a safe haven due to complex banking secrecy laws, was not enough to shield him from the reach of UK law enforcement. Coordinated efforts between agencies ensured that financial tracking continued, offshore accounts were frozen, and the paper trail linking him to the fraudulent operations remained intact. The pursuit emphasized that geographical boundaries offered limited protection against determined and coordinated investigation, particularly when the underlying financial and operational evidence was meticulously documented. The trial in absence underscored the seriousness of Patel's offenses. A 20-year sentence, delivered despite his absence from the courtroom, demonstrated that the legal system could hold individuals accountable, even when physical presence was impossible. Asset recovery efforts, including freezing £90 million in illicitly obtained funds and issuing confiscation orders, further illustrated the scale and impact of the criminal enterprise. These measures sent a clear message that sophisticated fraud, while complex and multi-jurisdictional, is ultimately subject to legal consequences, and the combination of investigative diligence, forensic accounting, and international cooperation can neutralize attempts to escape justice. Patel's case also had wider ramifications for UK enforcement practices. Authorities were prompted to refine their approach to detecting, investigating, and prosecuting large-scale fraud and counterfeit operations. It highlighted vulnerabilities in supply chains, tax enforcement, and the movement of goods, prompting policy discussions and procedural changes designed to prevent similar schemes in the future. By exposing both the methods used by Patel and the systems he exploited, the investigation provided valuable lessons for regulators, businesses, and law enforcement alike, illustrating the need for vigilance, transparency, and cross-border cooperation in combating sophisticated economic crime. Ultimately, this phase of the investigation demonstrated the intersection of criminal ingenuity and professional knowledge. Patel's knowledge of international trade, finance, and logistics enabled him to exploit legal and regulatory systems while maintaining a facade of legitimacy. Yet it was precisely the complexity of his operations, the meticulous documentation, the coordinated financial flows, and the reliance on professional networks that allowed investigators to reconstruct the full scope of his enterprise. The evidence showed that while criminal networks may strive for invisibility, they inherently produce traces that, when systematically analyzed, reveal both the methods and the individuals behind them. The case of Arif Patel thus stands as a striking example of modern white-collar and organized crime, where expertise, strategic planning, and international networks can be harnessed for illicit gain, but also where the same elements provide the pathway for accountability and justice. It emphasizes that no operation, however sophisticated, is impervious to thorough investigation, collaborative enforcement, and meticulous attention to detail. This story not only exposes the mechanisms of a large-scale criminal enterprise, but also reinforces the principle that knowledge, expertise, and resources carry responsibility, and that the consequences of violating legal and ethical boundaries are unavoidable, no matter the perceived sophistication or distance from the law. The culmination of Arif Patel's criminal saga came into sharp focus with the trial in absence, a legal process that demonstrated both the reach of the UK judicial system and the seriousness of his offenses. Despite residing in Dubai and seemingly beyond the immediate grasp of UK authorities, Patel could not escape accountability. The courts proceeded with a full examination of evidence, presenting the meticulously documented records of his operations, the financial transactions through offshore accounts, and the shipments of counterfeit goods that had moved undetected for years. Each document, from bank statements to shipping manifests, painted a picture of a man who had intentionally built a complex, multi-layered empire designed to exploit gaps in law enforcement oversight and public finance systems. The trial in absence was a clear message that physical location could not shield anyone from justice when the evidence was comprehensive and compelling. During the proceedings, prosecutors laid out the structure of Patel's operation in detail. They demonstrated how Faisal Techs Ltd served as the public face of legitimacy, masking an extensive network of shell companies and fake business entities created to facilitate VAT carousel fraud and the importation of counterfeit designer brands. Each transaction, no matter how small, was shown to be part of a broader pattern of deception. Investigators explained how goods bearing labels from globally recognized brands like Nike, Prada, Calvin Klein, and Disney were manufactured or imported illegally and then distributed across the UK through seemingly legitimate channels. The sheer volume of products involved, combined with the elaborate financial maneuvers, underscored the sophistication and audacity of Patel's operations. One of the most significant aspects of the trial was the emphasis on the multi-jurisdictional nature of Patel's activities. While his physical presence was in Dubai, the evidence traced his influence across the UK, highlighting the global nature of modern financial and commercial crime. Offshore accounts, professional intermediaries, and international shipping logistics allowed him to manipulate systems and evade detection for years. But these same elements also provided investigators with the tools needed to trace the flow of money and goods. By mapping the connections between his offshore holdings, domestic operations, and fraudulent claims to HMRC, authorities were able to construct an airtight case, demonstrating the inevitability of legal accountability, even across borders. Asset recovery became a major focus as the case progressed. Investigators and the courts sought to freeze and confiscate assets linked to Patel's illegal activities, ultimately freezing £90 million and issuing confiscation orders. This process involved not only identifying and securing funds in offshore accounts, but also coordinating with international banking institutions to ensure compliance with UK legal orders. Each frozen account and recovered asset represented a tangible step toward dismantling the financial foundation of Patel's empire, preventing him from benefiting from his decades-long scheme. The scale of the asset recovery emphasized both the magnitude of the fraud and the determination of authorities to reclaim funds for public benefit. The sentencing itself was a landmark moment. Patel received a 20-year prison sentence in absentia, reflecting the severity of his offenses and the systemic impact of his activities. Beyond his personal consequences for Patel, the sentence highlighted the seriousness with which UK law treats large-scale fraud, counterfeiting, and VAT manipulation. The court emphasized that the combination of financial acumen, professional networks, and exploitation of legal loopholes did not mitigate the gravity of the crime. Rather, it demonstrated a level of planning and sophistication that warranted significant punitive measures. The decision also served as a deterrent, signaling that no level of expertise or sophistication could place individuals beyond the reach of the law. Patel's case had a broader impact on enforcement and regulatory practices in the UK. HMRC and law enforcement agencies gained valuable insights into the vulnerabilities exploited by carousel fraud and large-scale counterfeit operations. Procedures for monitoring shipments, verifying export claims, and cross-referencing financial transactions were refined to detect similar schemes earlier and more efficiently. Investigators also developed strategies for engaging with international authorities to secure evidence and freeze assets abroad, recognizing that global financial crime requires equally global cooperation. The lessons learned from Patel's case have informed policy and practice, making it more difficult for comparable operations to remain undetected in the future. Another critical element of the case was its illustration of the human and organizational dimensions of large-scale fraud. Patel relied on a network of individuals, including accountants, shipping managers, and intermediaries, each playing a role in sustaining the illusion of legality. While some may have been complicit, others were unwitting participants, believing they were engaged in legitimate business transactions. This dynamic highlighted the importance of oversight, transparency, and due diligence within professional and commercial environments. It also underscored how leadership and influence can shape organizational behavior, emphasizing the responsibility borne by those who manage complex operations. The aftermath of Patel's conviction reinforced the lesson that sophisticated criminal enterprises, no matter how well concealed, leave traces that can be followed, analyzed, and ultimately used to achieve justice. The combination of digital records, financial tracking, shipping documentation, and professional correspondence created a mosaic of evidence that investigators could reconstruct over years of patient work. Each piece of information, when properly examined, contributed to a coherent and compelling narrative demonstrating guilt beyond reasonable doubt. Patel's attempts to obscure his activities through legal structures, offshore accounts, and physical absence were rendered ineffective by the methodical and persistent work of investigators, auditors, and prosecutors. From a societal perspective, the case also raised awareness about the prevalence and impact of counterfeit goods and large-scale financial fraud. Consumers, businesses, and regulators were reminded that counterfeit products are not only illegal, but can support expansive criminal networks, while carousel fraud represents a substantial drain on public finances. By publicizing the details of Patel's operations and the mechanisms used to uncover them, the case served an educational function, helping stakeholders recognize potential vulnerabilities and the importance of vigilance in commercial transactions. Finally, the story of Arif Patel illustrates the intersection of ambition, expertise, and illegality in modern organized crime. He demonstrated remarkable skill in logistics, finance, and management, yet these talents were applied to criminal ends. The scale of his operation, the sophistication of its structure, and the international reach of his activities are reminders that modern crime can mirror legitimate enterprise in complexity and professionalism. However, his eventual downfall also reinforces a critical truth. No system of deceit is invulnerable. Meticulous investigation, coordinated enforcement, and the unrelenting pursuit of justice ensure that even the most sophisticated criminals can be held accountable. In conclusion, Patel's trial and absence, the recovery of millions in illicit assets, and the long-term impact on UK enforcement practices represent the final chapter in a 10-year-long saga of deception and fraud. His story is a testament to both the ingenuity of modern criminal enterprises and the persistence of law enforcement. It emphasizes the importance of transparency, diligence, and international cooperation in confronting complex economic crime, and it stands as a cautionary tale for anyone who might be tempted to exploit systems for personal gain. The lessons from this case resonate beyond the courtroom, shaping policy, practice, and public understanding of organized financial crime in the modern era.